At the bank, we have firm views on where we think the budget balance is going. We also have firm views on where the bond yields are likely to go. So you can actually, if you've got a good sense of where those two markets are headed, then derive where the exchange rate is likely to go.
Yes, it's time for Coffee Break Commerce, your business and forex audio fix created by Absa Corporate and Investment Banking. Hello, and welcome back to the podcast that deciphers and decodes your economic and currency issues, all in the time it takes to drink a cup of coffee. Now, in a previous episode, we've discussed Absa's peer model, the FX model that assesses the rand's value in relation to other currencies with similar features, in other words, its peers. Today, we're going to be introduced to a brand new model and how it works by Mike Keenan, Principal and Head of Fixed Income and Currency Strategy for Absa. Hi, Mike, and welcome back to the podcast.
Hi, Justine. Great to be with you again.
Great. Well, we have previously discussed the peer exchange rate model. Tell us why the need for a new model and a new approach.
So, Justine, clearly there's a lot of factors that can influence an exchange rate over various periods of time. So, the peer model was one approach, and like you correctly said, that's looking at the rand compared to other comparative currencies. But we also want to try and see what the rand's fair value is based on some different schools of thought. So we've recently introduced this portfolio balance approach. We also have a purchasing power parity model. So it's just looking at the currency from a different angle because the currency markets are pretty fluid. They're always evolving, and one's got to try and have a suite of models so that you can apply the appropriate model for whatever the current situation is and what you think is going to be the dominant drivers going forward.
Then maybe just give us a little insight into the thinking behind this new model.
So our new model comes from the theory from James Tobin, an economist who came up with a portfolio balance approach. And in that approach, he believed that exchange rates were really driven by people's appetite for foreign assets. And those foreign assets he kind of classified as foreign or local bond holdings. So essentially, investors could choose between whether or not they wanted to buy local bonds or whether or not they wanted to invest in offshore bonds. And they would buy and sell those bonds depending on whether or not the expected return from either the local or the foreign bond markets were outweighed basically the risks associated with holding those assets. So unfortunately, when countries run large fiscal deficits like South Africa has been in the last few years, then what tends to happen is that the government ultimately needs to increase the amount of debt to fund those deficits. So bond issuance increases, and then all of a sudden the risk attached to holding those South African bonds increases. So those foreign investors then require a higher risk premium, either in the form of higher bond yields or in the form of a more competitive exchange rate. So at the bank, we have firm views on where we think the budget balance is going. We also have firm views on where the bond yields are likely to go. So you can actually, if you've got a good sense of where those two markets are headed, then derive where the exchange rate is likely to go based on this portfolio balance theory.
So how accurately has this model been explaining the past performance of the rand?
So it's been very, very, very interesting. So we ran our sample period all the way back to sort of 2000. And we found that this model really kicked in from 2008 onwards, soon after the global financial crisis. And that was an important point in the South African economy because at the time, South Africa started to develop these massive budget deficits, and they just increased and increased. And they're only in the last couple of quarters are showing signs of sort of topping out. So it became a very appropriate model to apply from 2008 up until now. Before then, that kind of theory didn't really explain the rand's performances all that well. So that comes back to those earlier remarks I made, that it's horses for courses. You need to apply the appropriate model for the kind of macro environment that you find yourself in. And at the moment, there's a lot of talk and discussion amongst investors about what's happening to South Africa's budget deficit and also what's happening to America's budget deficit. Because we are talking about an exchange rate here, so we need to compare the relative trajectory of our budget balance relative to that of the US. And we know that in the US, there's a big push to stimulate the economy, and that's coming through a bigger fiscal deficit in the US. So actually, in South Africa, while we're running budget deficits now of about 8-9%, the US budget balance has ballooned all the way to 15% of GDP. So for the first time in a very long time, our budget balance is smaller than America's budget balance as a percentage of GDP. And again, according to this portfolio balance theory, that would imply that actually investors will not demand as much of a risk premium in the currency or in our bond yields, as was the case in earlier years where our budget deficit was a lot higher than the US.
So, what are the implications of all of this? And what does this tell us about the value of the rand currently?
So it basically gives the rand a bit of reprieve. So in previous years, we had this ballooning deficit. Our bond yields were going higher. Our currency was weakening because investors were demanding a higher risk premium for owning South African assets. So it was very consistent with Tobin's sort of theory on exchange rates. And now the opposite is happening. So if South Africa continues to see a narrowing in its budget balance and the US continues to spend its way out of this COVID crisis and their budget balance continues to swell, then the rand should recover against the dollar. We've already seen a substantial recovery, but it could actually recover even further if that budget balance differential continues to widen up. So just to put it into some numbers, I mean, that model is currently saying that it's not implausible that dollar rand could go as low as 12.5 against the US dollar through the course of this year due to these diverging budget balances.
And what does this mean for Absa clients, for businesses, for people trading currency?
So, well, I think the one thing that's on a lot of importers' minds at the moment in South Africa is should they not be now starting to hedge their currency because they need to import on an ongoing basis, and the rand has recovered significantly over the past sort of 12 months. And they would probably feel that this is maybe a good time to hedge that currency exposure and risk. But if this fundamental backdrop continues to favor South Africa relative to the US based on these budget differentials, then perhaps they shouldn't be too hasty to cover all of their foreign exchange exposure. Maybe they should do some of it, but there is a chance, and it is conceivable, that the rand actually strengthens further, because that's what this theory suggests should be the case. Obviously, the converse is true for exporters. They want to sell at as high levels of dollar rand that they can. So we have seen the rand coming back to the 14 rand handle, hovering around there. But if this model proves to be true and we do actually continue to strengthen, then now is not necessarily a bad time for those exporters actually to cash in their dollar proceeds. So it's going to have different implications for different segments of the market.
That's all for today's Coffee Break Commerce, created for you by Absa Corporate and International Banking. Thank you, Mike Keenan, for your insights, and thank you, listeners, again for joining us. Please continue telling us what you'd like to hear more about, and keep talking to us by sending your FX questions to internationalbankingservices@absa.co.za.